Have we seen the end of the correction for gold in October? Joining me today is Adrian Day. We're at the New Orleans Investment Conference. Adrian, thanks for being with me once again.
Good to see you. Thank you.
All right, Adrian. Let's talk gold. We're having a good day today. Some viewers were getting a bit scared of what was happening earlier in the month. Has the correction come to an end?
I think we've probably seen the low for October. We've got to remember October is always a low month for gold. People tend to forget that. You typically have a strong September correction in October, and then it starts to go up again. And of course, November, December tend to be good. So, I'm not worried about the correction. When you look at where gold came from at the beginning of August, look where it is now. It's still up. It's still up significantly. But correction was really very mild.
So gold is up 1.6% since last Thursday. Today, the FOMC minutes came out. The Fed is sticking by their accommodative monetary stance, obviously supporting gold there. But aren't you surprised that people are still surprised?
Well, that's it. I mean, this really isn't a surprise, is it? We know what the Fed's policy is. The only question is how much stimulus and how long it's going to go on for. But, that would have been a surprise if the Fed had said we're going to stop next year. So, no, I mean, the truth is I think this was just a kind of reminder to people what the fundamentals are, what's driving gold. What's driving gold is easy money and low interest rates. And the Fed, once again, has reiterated they're going to continue with easy money and they're going to continue with low interest rates for the foreseeable future. So that's positive.
So, Adrian, you mentioned that November tends to be strong for gold. Yeah. Why is it? What happens in November that makes it a favorable ground for gold?
Oh, that's a good question. I mean, you obviously have the buying for Christmas. That helps. But I think it's just a sort of market thing. You have a big rally in September, which is the jewelers buying gold to make jewelry ahead of Christmas. And then you have a pullback and a correction. And then, of course, you have the other religious holidays throughout the world. Other religions have holidays in November, and then again in January, Chinese New Year, and then in February, Ramadan. So all of this helps push gold higher for the first quarter as well.
Now, speaking of buying, China and India demand lower, and they're obviously the two main primary buyers of gold. China's GDP coming out last week lower. I think it's the lowest since 2009. Yeah. Do you think that will have an impact on gold, Adrian?
Well, I think the Chinese numbers were one of the reasons that gold corrected the way it did in the last few weeks. Because let's face it, other than seasonal factors, everything else is positive for gold right now, absolutely everything. So I think the Chinese numbers were one of the reasons. People are concerned that if China's GDP slows too much, the demand for gold will correct. And of course, India, as you mentioned, has had slower gold demand. But when you look at China, we get overly excited, I think. GDP growth over 6% with inflation under 2% is very strong real growth. So I'm still quite sanguine on China. I'd be more worried, frankly, if we still had 10 and 12 and 14% growth, because then you'd know something would have to give.
But on the topic of China, do you think China is a currency manipulator, as Mitt Romney alluded to the other week?
I don't believe in all this currency manipulation stuff. I mean, you look at what's happened to the Chinese renminbi over the last 10 years, or even over the last 5 years, and it's appreciated fairly significantly. I don't have a number off the top of my head, but it's about 25% over the last 5 years. China's currency is going up. The problem is not China. The problem is the United States dollar. That's the problem. They want a weaker U.S. dollar, and so they're badgering everybody else to increase the value of their currencies. But, it'll come. It'll happen. It'll come.
I love how the passion comes out in you, Adrian, when we talk about this topic. And obviously, I have to ask you, presidential elections coming up in the U.S. This conference is very much an investment conference, but there's a big political angle to it. Do you think we'll see any impact on the markets right after the election?
Well, the one big impact that could happen, there's been a lot of talk about the President Obama's, I've got to be polite now, President Obama's proposed tax increases, both on investment in capital gains and dividends and interest. Now, there's been a lot of focus on that, but nobody's really done anything about that, because typically when the capital gains rate is going to go up next year, people sell their long-term gains to capture the lower rates. We haven't seen that yet. If the Democrats were to take control of the House and the Senate, and Obama were to win the presidency, I think people would really focus on those capital gains going up, and you could get quite a sell-off in the market for that reason.
Right, and Obama is also much more focused on spending on infrastructure, science and technology, education, which should be favorable to commodities, no?
To gold, absolutely. I'm talking about the immediate reaction to that kind of, and it's not just if Obama wins the presidential election, because to get an increase in capital gains tax from 15 to 40%, basically 40%, will require all three parties, the House, the Senate, and the presidency, to be Democrat.
Right.
If the House is still Republican, it won't get through. It won't go up. Now, looking longer term, though, and a lot of people haven't really focused on this. A lot of conservatives haven't really focused on this. You know, if if Romney wins and replaces Bernanke with someone who's a little more like a Volcker, that is obviously clearly negative for gold. So you've got to be a little bit careful what you wish for around here.
Absolutely. I love when the gold bugs are harsh on Bernanke, but they don't realize maybe he's their best friend.
Well, I think the truth is, I mean, I'm in the same position. Well, we don't want to get into politics here, but I mean, I think Bernanke's been an absolute disaster. He's been a total disaster for the economy and for the currency. And if he carries on, the dollar will soon be totally worthless, in my view. But that's an exaggeration, but it'll be worthless. But clearly he's good for gold. So there is a dichotomy between what you think is good for the economy and the country and what you think is good for gold.
Okay, so you said exaggeration when you said worthless, but could the U.S. possibly lose their position as the reserve currency of the world, you think, Adrian?
I think that'll absolutely come. The big question is when, though. And you see, in the past, when a currency has lost its status as a reserve currency, there's always been an obvious replacement. So, to take the most recent case, Britain. You know, when Britain fought 2 world wars and took on huge amounts of debt to finance those wars, you know, it was very, very obvious in 1946. It was clear to everybody around the world that the United States was now top dog. And the capital markets in the United States were deep enough to become the world reserve currency. That's not the case at the moment. Everybody's saying, well, China's probably going to be the next reserve currency, but the capital markets in China aren't deep enough at the moment to support that. So there's no obvious replacement, and so I think it's clear that the dollar will lose its status. I mean, that's obvious. You just look at 2,000 years of history. Nobody stays on top forever. And as a Brit, I know that only too well. But it's a question of when that'll come.
So what does the U.S. need to do to avoid that from happening, Adrian?
Well, they need to stop printing so much money. That's pretty obvious, number one. They need to we need higher interest rates in the United States. I mean, we've got interest rates that are artificially low, and low interest rates are not good for an economy. I mean, we basically need a stronger currency, and the way to get a stronger currency is to increase your interest rates and to stop printing so much money.
So the Fed has said that's not going to happen anytime soon. So do you think that $2,000 goal is still in the realm of possibility, given this scenario?
Well, you didn't say when, so I'll say yes. The clear
next
answer,
6 months.
I think so, absolutely. No, I think unless Romney wins and immediately replaces Bernanke, and I don't think he'll do that.
Okay.
You know, that's not his style to do things in dramatic fashion like that. If the Fed continues with its present policy, we will be at $2,000 gold within 6 months, yes.
This was great thoughts from you today, Adrian. I really appreciated it.
Thank you, Danielle. Always good to see you.
And thanks for watching our coverage from the New Orleans Investment Conference. We'll have more for you on Kitco.com. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com. Reporting from New Orleans, I'm Daniela Cambone.